There's a lot to consider when you're thinking about buying a house. In this video, I'm going to break down the 16 steps to buying a home and explain why they're all important. If you're new to this channel, I'm Ken Tyndall. I've been a real estate agent for more than 20 years. For all kinds of information about buying and selling real estate, subscribe and like this video. It does help the channel. Now let's get right into this video. This is sort of a home buying checklist. And the first thing on the list you should do is make sure you're ready. And this means making sure you're financially ready and making sure you're ready. Even a starter home is a big financial commitment. Are you ready for that? Are you ready to put down some roots? Are you ready to take on more responsibility for maintaining your property? You've got to make sure you're prepared for the ongoing expenses of owning a home. Think about this. What are your goals for the next few years? Determine what makes sense for you financially. Would it make more sense to rent for another year or more before you buy? So you need to start thinking about all of that ahead of time, probably months ahead of time. That way you have plenty of time to talk to friends and family and start researching so you know how much money you're going to need, what documents you're going to need, and what else you're about to get yourself into, and start getting organized. Step number 2 is to take a look at your finances. Before you start looking at homes or even searching online, determine how much house you can afford. Buying a house is probably the biggest financial decision you'll ever make. That goes for first-time buyers and for experienced home buyers. So before you make that commitment, you need to make sure your finances are in order. And you need to calculate other costs that go along with being a homeowner. I'm talking about the actual mortgage, the principal and interest, and the property taxes, homeowners insurance, and possibly homeowners association dues or condo association fees. You can actually find a number of mortgage calculators online. A home affordability calculator can help you figure out your budget. It'll calculate your income, debt, down payment, location of your property, and show you what your mortgage payments might look like so you can determine how your finances would look as a homeowner. And keep this in mind. You might be able to qualify for a big mortgage, but do you really want to commit to that big of a house payment? You don't want to be house poor. When you eventually meet with a mortgage expert, they can help you fine-tune these numbers. You'll also want to check your credit score. A good credit score is critical to getting a lower mortgage interest rate. If your credit score could use some help, you might want to wait to buy a home and work on that first. I did a video on how to fix your credit score to buy a house. I'll put a link in the description down below. And that takes us to step 3, figure out your down payment. After you figure out what you can afford, you can determine how much of a down payment you'll need. It used to be 20% down payments were most typical, but now home buyers can often put down a lot less. You might still be able to find a 3% or even 0 down payment loan. Those smaller down payments mean less money out of your pocket up front, but it usually means you'll have to pay private mortgage insurance, which means a higher monthly payment. If you're a first-time buyer, you might be able to find down payment assistance programs to help. You might also be able to get some help from your parents or others. If they can afford it, some loan programs allow gift money to be used for a down payment, but there are limits. And one more thing, in addition to a down payment, you need to set aside extra money for closing costs. That can be anywhere from 2 to 5% of the cost of the loan. And you should also have some emergency money set aside in case you have any unexpected repairs. Step 4, determine what type of mortgage is right for you. You should weigh the pros and cons of each option. Conventional loans typically have lower minimum down payments, but it might be a little tougher to qualify. FHA loans are backed by the federal government. They're easier to qualify for, but they have stricter requirements for mortgage insurance. VA loans are for active or former service members and qualified spouses. You can also get a VA loan with no down payment. Then you have renovation loans that allow you to include the cost of home improvements and the overall home loan, and jumbo loans for more expensive homes. You'll probably need a bigger down payment and higher credit score to get a jumbo loan. With all these loan types, you might be able to choose between a fixed rate or adjustable rate mortgage, and you can also pick the term. 30-year mortgages are most common, but they also have 20-year, 15-year, and even 10-year mortgages, which usually have lower interest rates. So some of the other things that impact your interest rate are your credit score, the amount of your down payment, what type of property you're buying, is it your primary residence, a vacation home, or an investment property? Choosing the right home loan can increase your chances of approval and save you a lot of time and money. Then step 5, get pre-approved. Getting pre-approved for a loan is different from getting pre-qualified. This is when you contact your bank or credit union or mortgage broker or online mortgage lender. They'll take your information and calculate how much house you can afford and pre-approve you for a loan. To be clear, a pre-qualification just means the lender is sort of tentatively willing to loan you up to a certain amount of money based on the information you provide. A pre-approval usually requires a loan application and a number of documents, verification of income, funds for a down payment, and a credit check. It's a good indication that if you make an offer on a house and it's accepted, you'll be able to qualify for a mortgage. By the way, some home sellers don't even want you to see their properties unless you've already been pre-approved for a mortgage. And when you're shopping for a mortgage, make sure you ask the lender what closing costs you'll have to pay and ask about mortgage origination fees. Step 6 is to decide what you're looking for in a home. So you know what you can afford, what you qualify to buy. Now you can come up with your wish list. Of course, you've already thought about it. Do you want a single-family home, a condo, a townhouse? What are your must-haves and what do you really want if you can afford it? How many bedrooms and baths, square footage? Do you want a yard, a pool, a basement? What's your ideal location? What about your commute? Do you need a house that's move-in ready, or would you be willing to take on a fixer-upper or at least some home improvement projects? You might be able to move into a bigger house or a more expensive neighborhood if you're willing to do some work. If you have children, are schools a consideration? Even if you don't have children, a good school district can help your resale value when it's time to sell. Other factors: safety, nearby amenities, HOA fees. So make a list of what's important to you in a home, and then step 7, find a good real estate agent. You know what kind of house you want, you've got your pre-approval, so now you can find somebody to help you find the right property. A good real estate agent can make a big difference as opposed to trying to do this on your own. They know the market, they know how to negotiate, they're familiar with contracts and real estate law. And by the way, there's nothing wrong with taking some of these steps sort of at the same time, and this is one example. You can start meeting your lender and get pre-approved for a loan at the same time you're talking to a real estate agent and coming up with your wish list. In fact, a real estate agent can help guide you through a lot of these other steps. And by the way, when it comes to working with a real estate agent, keep in mind they work for you, but they typically only get paid when a property is sold, and they're paid by the seller of the house, not the buyer. And while we're on that topic of things that don't cost you anything, if you need help finding a top-notch agent wherever you're looking to buy a home, you can contact me directly. I can refer you to somebody. Step 8, go house shopping. This is the fun part. I'm sure you've already looked online. You can show your real estate agent what you found, and your agent can take your criteria, your wish list, and narrow down all the available homes in your search area within your budget, make appointments to see the homes, and take you on a tour. You get to see them in person. I recommend taking pictures with your phone and taking notes. Write down the one big thing that makes each home stand out, good or bad. If you're looking at a number of homes, it's easy to forget what you saw in which home and what your impression was. If you're seriously considering one of the homes you see, take note of anything you might want to point out to a home inspector. You might also want to watch another video I did, 10 things buyers should check when touring a home. I'll put a link in the description. When you're home shopping, try to keep an open mind, and if you're buying a house with somebody else, try to compromise. Try to get on the same page. A little give and take goes a long way when you're trying to make a home buying decision together. Step 9, make an offer. So you found it. Your realtor should be able to guide you when it comes to how much you should offer depending on market conditions and the condition of the home. You can include your pre-approval letter with the offer. The offer will include the offer price and terms of the sale and your loan. If you're asking for any owner financing, contingencies, including inspections, and most likely you'll want to make sure the home appraises for at least what you're offering, any seller concessions or credits, and the time frame for the closing, and some earnest money or good faith deposit to be held in escrow to show the seller you're serious about the purchase. The seller might accept the offer or reject it or make a counteroffer. These negotiations can go back and forth for a while until both the buyer and seller are satisfied. Once the offer is accepted, you're almost there. Step 10, get a home inspection. During the inspection period, you can go back and take a closer look at the property, and it's recommended that you hire a certified home inspector. It usually costs a few $100s, but it's so well worth it. A home inspector will take a look at the home from top to bottom, the roof, the attic, plumbing, electrical. They can point out any issues that might cause problems and make a list of anything that really needs to be repaired. You can also get more specialized inspections. If the home has a septic tank or a pool, you can get those inspected. If mold is a concern, you can call in a specialist to inspect for that. And some lenders might even require a termite inspection. It's up to the buyer to pay for those inspections. Remember, those inspections could save you thousands of dollars in the long run. Step 11, negotiate any repairs or credits with the seller. If the inspections turned up any major issues, you can ask the seller to get those repairs done or give you a credit at closing. This all needs to be covered in the contract. If you can't reach a compromise with the seller, if your contract allows, you can walk away and find another property or pay for the repairs yourself. Step 12, secure your financing. You're already pre-approved, but that's not the same as final loan approval, and that's what you need to get a mortgage. You'll want to stay in touch with your lender during this whole process. Now, to get final loan approval, it's crucial to keep your finances and credit in line until all the paperwork is signed and you close the deal. During this loan underwriting phase, don't open any new credit lines or make any major purchases. Keep your credit cards paid down and try not to change jobs. Anything that could impact your debt-to-income ratio. The lender wants to see that everything is even-keeled and steady. The lender might ask for additional paperwork, updated bank statements, tax returns, or proof of income, so keep all that stuff handy. Step 13, get the home appraised. An appraisal is almost always required to get a mortgage, and typically the lender will order that appraisal. The appraised value of the home you're buying could be higher or lower than the purchase price. If it's higher, that's awesome. You just walked into a deal with instant equity. If the appraisal comes in low, they'll have to go back to the appraisal contingency in the contract. The seller could lower the price to the appraised value, or you could pay the difference out of pocket. In a strong seller's market with competing offers on virtually every house that goes on the market, I've seen buyers routinely pay higher than the appraised value. You need to decide if you're willing and able to do that. Step 14, get homeowners insurance. This is something else you have to have in place before you close on the property. The lender will require it, and it's just a good idea for you anyway. You'll want enough coverage to replace the home, which may or may not be the same as the purchase price or appraised value. You can start shopping around for insurance at any time during this process, but you need to have it in place during these final steps. Typically, the homeowner's insurance policy becomes effective on your closing date. Step 15, do a final walkthrough. This is your chance to take one last look at the property before you own it. It's an opportunity to address any outstanding issues, make sure any negotiated repairs have been made, and make sure the sellers got all their stuff out of the house or didn't take anything they were supposed to leave. Your real estate agent will set it up a day or two or even the day off closing to make sure the house is move-in ready. Make sure the utilities are turned on. You should have already called maybe a week ahead of time to get your utilities switched to your name. If you find any issues, you might need to delay the closing or address the issues in some other way. Step 16, close on your new home. This is when you sign all the papers and officially become a homeowner. Your lender should provide you with a closing disclosure at least 3 days before the actual closing. On the big day, the closing agent or attorney will go over the stack of documents with you. They'll let you know ahead of time what kind of ID you need to bring and exactly how much money you need and how to deliver the down payment and any other closing costs, whether you need to wire the money or bring a cashier's check. Once you have everything signed, you get the keys to your new home, usually. Double check to find out what's customary in your state. So in general, that's how the home buying process goes. Like anything else, there can be unexpected twists and turns along the way. If you have any questions along the way, your real estate agent and mortgage professional can answer your questions. And you can find other answers to your real estate questions if you subscribe to this channel, and you might also enjoy this video.